When you stop paying too close attention to interest rates for business loans and you focus on this one thing right now in this current market, you will see your business flourish galore, doubling, tripling, quadrupling, plus your monthly gross revenue, seeing those current profit margins increase, having greater profitability, increasing your cash flow, getting a handle on your income and expenses, stabilizing all of that, and it also affecting you in a great positive way on your health, in your relationships, on your personal side, not having to stress out as much or stress out at all, not being that person always in the business, constantly checking up on everybody over everybody's shoulders, and yourself doing everything or doing just so much that you shouldn't and don't want to be doing for any longer, as well as taking that time away with your family and friends to have fun, go out on a vacation, spend a couple of them and more time out there without constantly checking your phone. As you look out into the sunset, you have no worry on your mind. You can go have your adult beverage, finally go away for some time, go on that walk without feeling pressured like you have to constantly look at your smartphone or whatever phone you do have, and much more. Hi, this is Michael with Viral Funding Solutions. I'm a business funding expert. And no further introduction, the number one thing, it's repayment or repayability, you could say. And this simply means, for example, let's say you were given an offer, whether you accept it or not, hypothetically speaking here, and if you've been down this route, you will know and how to think about it, or you've learned your lesson or lessons and now you know better. But let's say you were given an offer of 40,000. No, let's just do 20,000 for this one. I always like to illustrate that one. So 20,000, and you're paying back like 30,000, but let's say 27,000 on that 20,000 you are getting. So what you're given in interest, we're not going to amortize it depending on a specific service. Certain services don't do interest rates, not amortized like that. It's not a traditional loan. So they do what's called factor rates or total payback. So we're going to focus on that at this second. But when you get like in advance a lump sum based on your performance on your monthly revenue, and we look at the last 3 months, sometimes historical, we'll look at 6 months more or less depending on the provider and the service and the industry and more. But let's say we look at 3 months current revenue over those last 90 days. How does it look like within those bank statements? How does cash flow look like? Average daily bank balance, starting, ending bank balances, deposits, how much deposits, what's the actual revenue, types of deposits. There's much more that I look at myself because as a business loan broker expert as well, I'm able to analyze and evaluate that type of documentation. I'm very cerebral. I'm an introvert. If this is your first time, you may not have thought that. But I've learned those skill sets and running my other businesses that I have. So I have one in the digital marketing agency, lead generation space. I have one in the health affiliate marketing space I've been running for a while, supplements, vitamins, ergonomic chairs, desks, seat cushions, and many more things. And then I have other verticals in that space, other ventures, and this is my primary focus as a business funding expert or business loan broker expert, you could say. But from what I've seen in all of this amounting over time, the difference is that repayment. So 20,000 paying back 27,000, let's say you were given a 1.27 total payback, or what we call factor rates. So on that 1.27, you owe 27,000. Now, the other thing you want to know, aside from that 27,000 you're going to be paying back, what are the cost of funds, 7,000 or so more or less from that, and then what is your actual term? So that's number two, and this is also in tandem and is most important in this market and will continue to be over many years as the interest rates continue to climb, over also how the lenders are more conservative with different services and what they want to lend and what they don't want to lend. I see all of that. I communicate with the best underwriters and lenders that are out there, and I do this every single day for all types of services. I even do real estate investing for investors and a lot of that. So 27,000 paying back, but what is my term? Am I getting 12 months? Am I getting 15 months? Because in this market, you want to make sure you get a long enough of a term. That's how you mitigate and lower that repayment. If your interest rates are higher, you have a better term to then drop your repayment. So if you were given an extension, let's say at your underwriting, maybe you were only given 6 months, or maybe you were given 12 months. It just depends on the underwriting. If you don't have the right credit score, you don't have the right time in business, you don't have the right revenue, you're not in the right industry, there's other factors within the market, inflation, the economic impact, supply chain issues. So there's a lot of differences with different businesses and business owners that we have to look through to make sure everything looks good for our evaluation of the conditions in this market and what others have been getting too, showing us data that this could potentially work based off of that data. So you have to understand that even if you were given, let's say, 6 months on that $20,000, and I'm gonna do extra math here. I have my desktop in front of me. Some of this I'm not gonna. You don't even need to know that. That's for a broker to know. It's irrelevant. But let's say you were having to pay back that $27,000, and on that $27,000, you were given 6 months. So usually you get Monday through Friday, and no weekends. So over 6 months, you can calculate that to be 20 days by 6 months. So that would be 120 days. So then you can quickly do the math. And there's more math that we do on our end for other things, but then you would divide that by 120 days. And that simply comes out to be a payment of $225 per day. We can break it up into weekly, monthly, and look at it over total annual debt over a year, over another year, if it were to roll over past 12 months. What other current debt obligations do you have? And there's more numbers that I can play with on my back end, especially when I have the documents, and the underwriters do too. And like them, I'm able to pre-underwrite files, just so you know this. Being an introvert, being a more cerebral type of person, other people would classify that as more brain work, I guess. But that's who I've been for a long time. And that's what I enjoy the most of, is the math, the systems, being able to do a lot of the back end stuff, being able to get you the right lender, the right provider, and it's very ethical. And so I know what the best underwriters out there are looking for. I communicate with them all the time. I see what they're doing, the lenders, and the math behind a lot of that. So when you're going through me, you'll have a better understanding of what potential range you're looking for in terms of interest, in terms of amount, what it comes down to. But for this example, 27,000 on a 1.27 rate, and that's actually really good. To get 20,000 first and to get a 1.27, you may not see that, but this is just to illustrate an example. It could have been you're getting 60,000 on a 1.38 or 1.45 rate. And that just means your risk assessment. It's dictated by FICO, it's dictated by a lot of things. But let's say that's the case, $225 per day. And just, I don't have to really do this, but just to illustrate, that's $1,125 per week. And then per month, you're looking at around 4,500 plus or minus on that. So can you do that over 6 months? Can you afford to pay back in total 4,500, but it's going to be taken out and deducted maybe daily or weekly with these types of products? Now, if you're trying to look at other rates from other services, maybe it's an online bank term loan, and there's more math I can do there, and those could be more traditionally amortized in terms of interest rates, and they can push towards 2, 3, 5 years more or less. But the question is, can you get those? So even if your payments were less, let's say you had an end of the month $2,500, $2,700, an $1,800 a month payment over 5 years or whatever it is, that could be more doable because you've extended your term, you've dropped your rates, as opposed to getting a medium to higher rate type of service with a lower term. Even if the term was a little bit higher, the repayment might still be up by a couple, 2,000 to 3,000, 5,000 more or less. So you got to think about what can you get and what should you do with what you get. So if you can get a better repayment, do that. If you can get a better term, do that. But not everybody can. So somebody who wants 8 months doesn't mean you're going to get 8 months. It means you might get 5.5 months because of the underwriting, because of the credit, the revenue, the industry, the time of business, more too high of a risk, no collateral involved. You have to understand that even if you can't take that $60,000 you wanted, but you can start off with 40,000, could you use that and could it be put to work? Could you take this money with what you currently have in your expenses and what you need to allocate those funds for, as well as growth and expansion? Is it going to generate for you enough of a return on investment, ROI? Will it increase that? What would it do to your cash flow in the next 3 to 4 months? So you have to play more into that than saying, hey, the interest rate isn't where I want it to be. The term isn't where I want it to be. Yeah, we're going to come to terms with a lot of that stuff in a lot of these different services. But what makes the difference is understanding that ROI, understanding your current margins, understanding that if you took 20,000, paying back 27,000, and let's say 60,000, paying 75, 80,000 on that, cost of funds being up there 20,000 plus. Well, think about it. If I'm going to make more than 80,000, if I'm going to make more than 75,000, even if I break even and I really needed this for what I needed to do and it's going to get me across, even though it's not going to help me increase my margins by that much, at least for the first time, then you think about that for how long. And then you go, I need to start with a little bit. even if I can't get what I get. And even if you're going to get what you can get, some people say, hey, 60,000 paying back that amount, I feel more comfortable starting off. Can I start off with at least 45,000, 40,000, more or less? And then that's how you can lower your repayment if you have that negotiation to do that with not the most favorable rate. And even if you had a favorable rate, you could still decide if you had that negotiation power and we were able to give you that, then you can then decide that. But if you have to start off with something, you go, I wanted 100,000, but I can only get 40,000 without collateral. I don't have enough collateral. And there are the 3 C's of capital that I go through with everybody: credit, cash flow, collateral. You either have one of these 3, 2 of these 3, or all 3. And I look at maximizing your potential around 1 and multiple of. If none, business trade credit. As a startup and as a non-startup, you should be working on that, separating your personal from your business. And I have a plan for you like I do for everybody. I understand all of this very, very well, being in your position once too. And I was once in a 9-to-5. If you're there now or are way beyond it, I've been there, where I didn't get paid the amount that I wanted to get. And the person in front of me in the supervisory role, I thought he would retire, an ex-hardware engineer, and no, he decided to stay on for certain reasons. And I was there for a lot of stability reasons. I had studied before. I went to school academically, university, played Division I soccer for a little bit, but studied, and I studied a bit of sociology. Then I made a transition over time to chemical engineering. I really love math and systems, so I put that side of the brain to work even more and grew that. And then over time, I wanted to start a business, so I already had certain requirements met on the business side. So then I transitioned fully to the business side and started getting into the whole realm of it. And then over time, I began a business. But in that time, in that financial logistics position I was in, working hard up here with data, as well as lifting boxes for a huge contracting company servicing HP, it wouldn't pick up so much physically. At a time it would. And I'm not physically built. I don't have the genetics. I wasn't given that gift. But what I've had for a long time is the heart. And I've always had the strength. And this only grew even stronger when I started to figure out how development on your personal side factors into becoming a better businessman, or if you become a businesswoman and you want to flourish even more, and getting that stress level, getting that way of thinking, compartmentalizing even better, and having better habits and routines really grew. And that understanding helped me out in so much that I do today. So being in that position in the financial logistics, one of my later roles in my younger 20s, I was already preparing at my desk one day, literally having a lunch, and a friend of mine on the Snapchat social media app messages me, and I go, I haven't talked to Tyson in some time. And he just responded back to like the teriyaki meal I was having, and we had a quick conversation, asked him how he was doing. He asked me, I was like, I'm doing good. But on the inside, I was burning. And I knew the company was going to go down under. They were going to relieve 50 plus people. And we just started talking about how his trucking business and what was going on there, as well as starting another business and other ventures. And he brought up the fact of digital marketing, e-commerce. And I had already some understanding of that. I tried network marketing at a time. It really wasn't my thing. Good thing it wasn't. And then we got into affiliate marketing, a digital marketing agency, and all these other things and all these other components. And literally that day, in between that, just keep in mind, I was in a cubicle where above me the light is so dim, yet it's so bright. It's like you were in an interrogation room. Like you just see the light above you hovering, and it was like it was moving, but yet it was so dark at the same time. And people could come in and out. People could walk down the hall and just kind of look in. I'd give them my introverted personality, and I would say hi at times too when they would come in, have a short or a little bit of a longer conversation if need be. But there were cracks underneath on the floor, brown flooring, cracks going in different directions. And I was literally having my ham and cheese sandwich with my Doritos. Usually I had my Doritos and my water on my desk where my computer is in front of me. My other coworker had gone off to lunch, done his own thing, and that's where I had the conversation with my friend. And literally that day, I went home. I couldn't get in my car fast enough to go over. I had my red Honda Accord, my 98 Honda Accord, I believe that was, yeah. And it was like the red roofing of it was like beat down, the hood of it, because of me living in California, to point in the heat doing that to the car. But I got home with my backpack on my left shoulder. I sat it down in front of my stair steps, and I gingerly did walk around the corner. In front of me now is my kitchen I'm staring at. My counter, I have my laptop. I picked it up, my HP laptop, and put it on my dining table because I had it there from the morning. I was looking through things. And literally, like a lot of us do, we research digital marketing agencies, and the rest was history. After YouTube videos, blog posts, and other stuff and resources, I began the digital marketing agency lead generation business. At the same time, I was building out my health affiliate marketing business and a few other ventures. And at that time, When the company did go down under, I had to go on unemployment benefits, food stamp cards, and it wasn't a good feeling. I had to go back on that again. And if you've ever been there or at a low point, these things happen, even with somebody like myself, academically speaking. And before that too, I had worked in construction, manufacturing, in the actual field and stuff like that in those companies, not like giving the cubicle. So I know what it takes to do hard work and seeing the operations of a lot of these businesses, warehousing, retail, working in a lot of different directions. But understanding those components really helped me out over time. And at that moment, I didn't want to feel like I was letting down people in my family, even just going out for a meal, feeling like I was reluctant to do this, even though I could spend a little bit, even cut half and half. And even going out to spend on things, I would be very conservative and very just mindful of it. And I didn't want to let them down. I didn't want to just give them the burden to continue doing that. And these things can happen in life. So that's pretty much where my journey then took off from there. And you could say the rest became just more transformative for me. I just started to see things more accurately and started to grow my businesses. But that's what I want to leave you with in this video. That's all I want to go through. There's more I can touch on when it comes to repayment and terms and interest rates. You're not always going to get what you want. You have to begin somewhere. Take an initial amount. Come back. I help you get more underneath the same lender or a different position or another provider with another service if possible. And we can maximize the type of funding that you're trying to, or the amount of funding you're trying to get. There's multiple ways of looking at it, like adding an online bank term loan with the line of credit, an online bank term loan, trying to use a streamlined SBA loan process. Or we then get into that in time, but first we focus on creative credit-based financing, maximizing using your credit to be able to get your personal and business credit cards, getting the personal loan, term loan, personal line of credit, whatever we need to do there. And then later on, we can see if we add another service that is no hard credit checks. We do uncollateralized, unsecured funding, meaning unsecured, meaning uncollateralized. And we could get you in advance. You need an additional $50,000. You can use your monthly revenue. There are different ways to look at it, and you have to understand the ROI. And a lot of people who don't take those more medium to higher rates are because their expenses are just too high, and they're in a position where they owe a lot, and it wouldn't make sense to put them in less of a dire need, and they need more cash flow, yet they don't have enough of it, or they're circulating not enough of it, and they're just growing and growing, and their expenses are rising and rising, and so much more. But everybody has a starting point. I just want you to know that. Don't be too rate sensitive, or don't be rate sensitive at all. Focus on, if you can't get even a higher term to begin with, the next time around, we can try to do more. We can try to increase that term, lower your rate, give you more funding, even double the next time around. And I'll go through these things with you so you better have a better understanding. So that's everything from me. Down below in the description will be more information. There will be a questionnaire form for you to fill out if you haven't. And this basically allows me to analyze and evaluate and be able to see what your best funding option and options are very thoroughly. And I'll get you a very highly personalized and customized email response, even with a PDF attached to it, where you have no question when you look through it. And all this information, a lot of it can't be publicly displayed, or they don't want you to know that, but I'll show you a lot of this stuff and you'll go, aha, if only I had somebody who could communicate this with me before, and I've taken funding or I haven't, but I've been looking anywhere and everywhere and I'm not sure about these services. And so you have to be careful out there in the market. There are a lot of scams. There are those that are legitimate, but they're not the best to go to in their practices, and they're doing backdoor things that they shouldn't be doing, and others are doing it ethically, but it's not the right lender for you and what you should be doing. So be cautious of a lot of that. So questionnaire, and if you have filled that out, I'll get back to you if I haven't, and if I have, I will in time. That is everything for now. Appreciate you. Thank you for tuning in, and I will speak to you on the next one. Take care. Bye.